All right, so it's a temporary tariff reduction. Tariffs right now at 30%. What does that mean for the retail sector? Is that palatable? How does that impact their ability to bring in goods for back to school and also the holiday season?
Well, 30% is much better than 145, that's for sure. So coming off earnings season in the last, week or so, the main takeaways are basically brands and retailers are making a lot of progress moving out of China. So the move out of China is happening faster than folks would have expected even a month ago. So that's a big positive. Brands are negotiating with their partners and their vendors better also than expected. So that's another positive. Of course, what's uncertain is what's gonna happen with demand. Are all consumer going to be able to absorb the price increases? It does sound like pricing is the last resort as we talk to our companies, but that is a big risk, especially if you're selling into the mass and value channel.
All right, so according to your note, you're seeing a lot of companies move away from China, but the company that you're really recommending right now is Nike, a company that's going to have a very hard time moving away from China. What's making you so excited about Nike right now at this kind of a pivot point or inflection point when it comes to the trade talks?
Yeah, well, Nike is a pretty interesting, controversial turnaround, type of a idea that we've been recommending for a few months now. Actually, when you think about the China for Nike, you have to think about what's sold in the U.S. And that percentage is pretty manageable. It's about low single digits that actually is attributable to the U.S. And that's one reason why the Nike stock was up, pretty nicely yesterday and is up off the lows. What's interesting is there's a new CEO at Nike, as we know. We do like this strategy for the company. They're going more into the wholesale channel and they're accelerating some of the newness. There are definitely some green shoots with the product, and we're waiting for Nike Skims as well. That's something that they talked about that we're pretty excited about. I think going forward with the stock, it's going to be the positive rate of change. So essentially, the less bad on the sales front as we go through the next few quarters. And again, they've shown some progress moving through classics inventories and inventories overall. And we think profitability, in the current year has reached troughs. So that's some of the reasons why we're still recommending the stock.
So, Anna, we got a bit of news today. The administration actually reducing the tariff when it comes to de minimis items. Who does that benefit and who does that potentially hurt? I would imagine it would ease things for Shein and Temu, but how does that impact other retailers here in the U.S.?
Well, so a platform that we follow is Etsy. And, Etsy is not affected by really what's going on with the trade wars. There's very little that comes from China for them, but de minimis for them is a big deal. So that for Etsy is still a positive. But that's something that we're watching, of course.